have people start looking when they first are starting to invest in that first, second, third, either syndication, home? Just kind of walk me through that blueprint that you have. That's I know is general, but more of a
Yeah.
general idea.
I think it starts with where you're at with your life. But let's say it's somebody working a traditional job, like and make pretty good money, maybe nothing crazy. I think the first thing you should do is read a book called Set for Life by Scott Trench, and
Hmm.
it talks about it talks about stock market and then the returns from stock market versus real estate and the idea of like house hacking potentially. Like I think those are all great avenues to build momentum and
Hmm.
sacrifices you make early on to get some momentum, and you don't have to make those decisions forever. So I think that's a great route for someone kind of middle of the pack financially, trying to get over the hump. Set for Life is a book, and that kind of philosophy and building from there into bigger, better, and getting into real estate that way is tremendous. Now, for those who are middle to upper in income and generating wealth, I think the book mentioned, Small and Mighty Investor, I think really should read my book, Real Estate Side Hustle, when it comes out. And I'm not just saying it because it's mine, but if you have a job and you're not trying to quit, but you're making pretty good income and you're trying to work passively, I think my book really breaks down how to start to get into real estate. And I think there's three ways that I did it that I think is very effective. And that's through owning your own properties, through syndications, and through private lending. And I think you could accomplish a lot in one of, if not all three of those. So if you have a little bit of extra money to work with and you're starting out, you can build out a team and start investing in single family properties. You can buy turnkey properties. You can get into syndications. You could lend to other investors and make more capital. So I think those are great avenues to start to look at. And you could check out my book to kind of get that jump start.
You mentioned that cash flow was like your main motive, right, in the very beginning, and now it's a little bit changing. Would you say cash flow should be the first thing most new people investing start out with, or do you have a different philosophy now?
I still value cash flow a ton, but I've realized that getting it directly from long-term rental real estate is not it's not what it's cracked up to be. Like people talk about that, and if you're putting 20% down on a traditional house and all and playing that game, there's people out there pocketing $200 to $400 per unit or per house, and it's like you got to stack a lot of houses for that to end up meaningful, unless you're putting way down. So even if you're, buying a property cash, and it's like you're getting a 6% return, an 8% return, somewhere in there, unless you're buying very distressed and forcing a lot of value. But for the most part, I would say 8 to 10% cash on cash is what the average person is going to get on a deal. To where it's like, all right, how can you make more? And I've recently kind of found, you can do that a lot better through business essentially.
Mm.
And but that doesn't mean that you don't invest in real estate. But real estate, I think 10, 15, and 20 years down the line, when those houses get paid off, when the rents have gone up, that's when cash flow starts to hit crazy.
Yeah,
But early on and right off the bat, it's not what it's cracked up to be on social media
mm,
and even in cash flow markets. So, I like to, now that I've realized it, I don't want to be a person who's banging my head against the wall saying the same thing to people when it's like, hey, my portfolio says differently. And I have to acknowledge that. And it's changed my investment perspective and strategy.
100%. Like you said earlier, and I agree because I do something a little bit more creative. If you want to go cash flow and not have your entire year's, cash flow wiped out with one roof or two AC units, you got to get creative with those single
Got to be
family
creative.
homes.
Yeah.
So that's one way to do it if you want to do it. But then also, maybe that is a little bit less passive unless you build your team around it. So,
Yeah.
guys, there's a lot of different ways to play the game. And that's why people reach out all the time. Like, I want to get into real estate. I'm like, all right,
That,
there's a
that's
lot
a
of different
that's a
ways to play real estate.
you bring up a really good point though, because if you want to invest passively, then doing pad split per room and all that might not be the move unless you hire a company. But then you got to factor in their fees and make sure your net return is worth it. Like, you know what I mean? So there's a lot of factors
Hmm.
that go into that. So I would say if you want to stay in real estate, but you're a cash flow investor, you have to be creative. And there's a couple of different ways. You can be creative with how you purchase. So that's creative financing, using seller financing, sub two, doing stuff like that. Or once you own the property with the kind of rental, maybe it's midterm, maybe it's short term, maybe it's by room, like pad splitting it. I mentioned senior living centers, sober facilities. You're going to have to be creative if you want to get cash flow in real estate in today's market, in my opinion.